Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES pulled back towards the previous close, and then we got another upside move fueled by a rate cut in China. And at this point, heading into the open, we have immediate support and the most aggressive support at 2066 to 2068. Holding above this area would just tell us that the buyers are in firm control and we're dealing with a very strong market. Now, it's already pretty evident in the price action, but even short term, holding above 66.68 would tell us that the market is setting up for yet another upside push into the 77.75 to 79.75 initial resistance zone, which is the primary upside objective on the day time frame, as long as we can hold above either pre-market or even initial support. So in the event that we break below 66, it doesn't really impact the uptrend that we're in right now. So we can still find buyers off of the 63.50 open gap, and that's also about the 50% retracement of the overnight range. So buyers can still defend at 63.50, and then we have initial support at 60 to 62, and then finally support at 53 to 55, which would also fill the gap. Now, ideally, given how strong the overnight session has been, you want to see the market holding above the initial support zone, above 60 to 62. In that case, we can still get that upside target of 77.75 to 79.75. If you break below 60, then that zone becomes questionable as an upside target, and then it doesn't mean that it's going to impact the overall bullishness of this market, but it just means that we may simply balance in a range, and in that case, the upside target would be 72.5 to 74.5, so we would have to adjust it down a bit. But the way that the market is shaping up right now, given how strong Nasdaq has been, we can quite easily see a move up to 77.75 to 79.75, and even 83 quarter to 85 quarter is very doable today, just given how strong Nasdaq has been. And right now, Russell is kind of gearing for a catch-up move as well. We've already seen it catch up a bit in the overnight session, and now it's trading near its short-term balance area high, which is roughly about 1167 to 1168. But TF can actually put in a breakout move today too, because there's a lot of catching up to do in that market. And if that takes place, then that can just further fuel more upside in the S&P. Nasdaq has already hit some major upside objectives. So today on the day time frame, we could see NQ lagging a bit, and that would be okay. So the reason I bring that up is that if you see weakness or short-term weakness, what appears to be short-term weakness in the Nasdaq, that should not be viewed as a bearish signal, even intraday, because Nasdaq has already hit some major upside objectives, and the other markets have catching up to do. So NQ has already hit kind of the equivalent of 2098 to 2100 in ES. So ES has catching up to do. And for that reason, Nasdaq doesn't necessarily have to extend the gains at the same rate or at the same pace as the S&P and the Russell. So even if there is a little bit of a pullback in NQ or some consolidation in NQ, that doesn't necessarily mean that it's short-term weakness in the S&P. So if you're watching Nasdaq and you're kind of looking at these markets as a whole, then just be aware that NQ is leading on the upside, and it's already hit some major upside objectives. So given how strong this market has been, the focus is going to be on the long side, on buying pullbacks into support, and as long as there is sustained upside momentum in real time, so as long as the skew on the NYSE tick is more bullish, and if the tick is especially holding above zero and printing some nice upside values, then in that case, we can even consider entering long at aggressive prices, even as a overnight balance breakout, targeting a move into the 77.75 to 79.75. That's an area where we could see some profit taking, and then above that, 83 quarter to 85 quarter is a spot where responsive sellers can be active, and that's an area where the market can struggle on the day time frame. And then the resistance areas above would continue to be in play: 88.75, 91, 93, 95, and then finally 98 to 2100. But those are bigger picture ideas. The market does not necessarily have to reach those targets today, but at the rate that we're going, it could be hitting those targets early next week. So right now, the focus is going to be more on the long side. 66 to 68 is the most aggressive support, the immediate support right now. And given how strong the market is, we could technically launch to the upside right from here. But in the event that we get a pullback, 60-62 is a good spot to initiate a long and look for a move higher, as long as we're not getting any major downside momentum in real time and sustained downside momentum. Getting negative tick values is very normal. That's not a big deal. What you want to see is the skew on the tick, because that'll tell you whether it's just a kind of a short-term pullback or whether it is sustained downside momentum, in which case you should just get better location. But 60-62 is decent location on a pullback. Even 63.50 is pretty good, and 53.55 is a very good spot to initiate a long and look for a reversal back up. And then finally, these zones below are active and valid as well. But again, given how strong this market's been, ideally you don't want to see too much of a pullback. And typically on this type of pattern, you're not going to get a deep retracement. Typically you'll get a shallow retracement, and then you'll either start to balance, and there will be this kind of bullish skew to the balance where the market will balance at higher prices, or it'll balance a bit and then break out again and tag those upper resistance areas. So the primary target on the day time frame, the high probability target, is 77.75 to 79.75, with potential to tag 83.25 to 85.25. Those are the main thoughts heading into the open. Let's see if the buy side can maintain here. That is the high probability scenario, and we'll take it from there.